What actions has China taken in response to U.S. tariffs, and what could be next? A transformation in the structure of global trade could be taking shape as tensions between the two largest global economies intensify into a full-scale trade war. On Friday, China announced a hike in its tariffs on U.S. imports, raising them from 84% to 125%. This change is set to come into force on Saturday, shortly after the U.S. increased tariffs on Chinese products to a combined rate of 145%. In response, China promptly countered by imposing tariffs on American agricultural exports like pork and beef, and introducing restrictions on the export of key minerals. It has also directed antitrust probes at significant U.S. firms, including DuPont China and Google, and has slashed the number of Hollywood films permitted in domestic cinemas. Analysts suggest that if U.S. President Donald Trump continues to escalate the conflict, China still holds several strategic moves in reserve. Here's an overview of what China has done thus far and what it might consider next. What has China done so far? Besides increasing tariffs and restricting mineral exports, China has also retaliated through legal channels by filing complaints with the World Trade Organization. Beijing has issued travel advisories, urging its citizens to carefully evaluate the risks of traveling to the United States due to rising diplomatic tensions. The Chinese Film Administration, which regulates the import of Hollywood films and caps the annual foreign film quota at 34, has stated it will appropriately reduce the number of U.S. films admitted. China, the second largest market for Hollywood, mandates that a portion of the revenue from these films be shared locally. Additionally, China is broadening its diplomatic engagement by strengthening trade alliances with other nations. This week, Commerce Minister Wang Wentao held talks with leaders from the European Union, the Association of Southeast Asian Nations, South Africa, and Saudi Arabia. Next week, President Xi Jinping will visit Cambodia, Vietnam, and Malaysia. A trip the Foreign Ministry says aims to bring fresh momentum to regional and global peace and stability. China implemented a tariff hike on U.S. imports Friday, bringing the rate up to 125% starting Saturday. While the Ministry of Commerce stated that China would not be swayed by the U.S.'s numbers game with tariffs, it made clear that further retaliatory action remains an option. If the U.S. persists in seriously undermining China's interests, China will strike back with full force and stand firm to the end, the ministry warned. Even before the start of President Trump's tariff offensive, China's economy had been slowing down, prompting analysts to anticipate that Beijing will explore strategies to cushion the negative impact. Premier Li Qiang held discussions with business executives, stressing the government's readiness to tackle various uncertainties, and pledged to roll out targeted policies as needed depending on evolving conditions. Chinese state media have hinted at potential monetary easing measures, such as lowering interest rates and reducing the reserve requirements for banks to release more capital into the financial system. To stabilize the markets, sovereign wealth funds, the People's Bank of China, and state-run financial institutions, collectively known as the National Team, have stepped in, purchasing stocks and bolstering exchange-traded fund holdings. While devaluing the yuan could help make Chinese exports more competitive, authorities are cautious about excessive depreciation, which could erode returns on investment and put further pressure on financial markets. Since the first round of the U.S.-China trade war in 2018, China's leadership has grown more adept at handling Trump and his administration, said Chen Zhiwu, a professor at the University of Hong Kong's Business School. Extensive preparations have been made for this type of economic confrontation. Are discussions between the United States and China on the horizon? Analysts are closely monitoring for any indications that formal negotiations might take place. Chinese authorities have repeatedly expressed openness to dialogue, but it remains uncertain whether Beijing is prepared to make meaningful compromises. The door remains open for dialogue, said He Yongqian, a spokesperson for the Ministry of Commerce, but any discussions must be based on mutual respect and equality. China is prepared to fight to the end if necessary. President Xi successfully mitigated the fallout from Trump's first term when the United States imposed tariffs and other punitive measures in an effort to secure improved trade conditions for American products. As the leader of China's Communist Party, Xi has earned Trump's praise for his strong leadership and is considered adept at navigating complex political situations. Beijing is unlikely to shift its current approach, which involves staying firm, weathering the pressure, and waiting for Trump to overplay his hand, wrote Daniel Russell, Vice President for International Security and Diplomacy at the Asia Society Policy Institute in New York. China believes that Trump sees compromise as a sign of weakness, so yielding could simply invite further demands. What impact could U.S. tariffs have on Chinese businesses? Many Chinese firms that endured the previous trade conflict during Trump's initial presidency have adapted by seeking out alternative markets and reorganizing their supply chains. A number of these companies have opted to absorb the increased expenses and settle for slimmer profit margins. For now, many exporters are in a wait-and-see mode, unsure whether to relocate or exit the U.S. market entirely. Much of China's exports to the U.S. consist of affordable, lower-tech goods, such as clothing, toys, household appliances, and furniture. In contrast, the country relies on importing advanced, high-value products like semiconductors, aircraft, and their components, pharmaceuticals, and industrial equipment. To lessen its reliance on foreign technologies, China has poured resources into advancing fields like chip design and semiconductor manufacturing. Nevertheless, the country still trails behind global leaders in critical tech areas. The U.S.'s broad tariffs targeting high-end goods and semiconductors could significantly hamper China's efforts in these strategic sectors. 5 key points of the China-U.S. trade conflict. Aggressive tariff increases by both sides. China raised tariffs on U.S. products from 84% to 125%, in direct response to the U.S. imposing tariffs of 145% on Chinese goods. This tariff escalation marks a significant hardening of the trade war and increases costs for both importers and exporters in both countries. The rising costs of imported goods directly impact the final consumer, both in China and the U.S., and threaten to slow down global trade by making products from both countries less competitive in international markets. China's retaliation goes beyond traditional measures. Beijing has imposed export controls on strategic minerals, crucial for the global tech industry, and launched antitrust investigations against major U.S. companies like DuPont and Google. These retaliatory actions could affect key global industries like semiconductor manufacturing, automotive, and electronics, leading to shortages, production delays, and rising prices worldwide. China's film administration has further restricted the entry of U.S. films, reducing the already limited annual quota of 34 films. This is a symbolic and economic blow to Hollywood, which counts China as its second-largest market. In addition to the economic impact on studios, this move reflects a cultural distancing between the two powers and could reduce the soft power of the U.S. in China. China strengthens international alliances. In response to U.S. pressure, China has intensified diplomatic talks with countries like European Union members, ASEAN, South Africa, and Saudi Arabia. The goal is to build stronger trade alliances and economically isolate the United States. Consequence by it. A new global trade configuration could emerge with China leading an alternative economic bloc, weakening U.S. hegemony and accelerating the fragmentation of the global economic order. Domestic economic policies to cushion the impact. The Chinese government, aware of the economic risks, has considered lowering interest rates and reducing bank reserve requirements to inject liquidity into the financial system. It's also discussed using its sovereign wealth funds and the national team to stabilize the markets. Consequence. While these measures may provide temporary relief, if the trade war continues, they might not be enough. Over the long term, China's economic growth could be compromised, which would also affect countries dependent on its exports and investments.